Cryptocurrency is a digital or virtual currency that uses cryptography to secure and verify transactions and to control the creation of new units. Cryptocurrencies are decentralized, meaning they are not controlled by any central authority like a government or bank, and operate on a peer-to-peer network. One of the most important features of cryptocurrency is its security. Cryptocurrencies use advanced cryptographic techniques to secure transactions and to prevent fraud and hacking. This makes cryptocurrency a safe and secure way to transfer funds across borders without the need for a third-party intermediary, such as a bank. Another important aspect of cryptocurrency is its transparency. Transactions on the blockchain, the technology that underlies most cryptocurrencies, are recorded and stored in a public ledger that is accessible to anyone. This means that cryptocurrency transactions are transparent and traceable, making it easier to prevent fraud and corruption. Cryptocurrency also offers several other benefits, including faster and cheaper transactions, the ability to operate globally without currency exchange fees, and the potential for increased financial privacy and control. The importance of cryptocurrency lies in its potential to disrupt traditional financial systems and create a more equitable and decentralized economy. By providing an alternative to traditional banking systems, cryptocurrency offers greater financial freedom and access to people around the world, particularly those who are unbanked or underbanked. Cryptocurrency also has the potential to reduce barriers to entry for small businesses and entrepreneurs, allowing them to compete more effectively with larger companies. Overall, cryptocurrency represents a significant shift in the way we think about money and financial systems, and has the potential to transform the global economy. Cryptocurrencies are decentralized digital or virtual currencies that use cryptography to secure and verify transactions and to control the creation of new units. Decentralization is one of the key features that sets cryptocurrencies apart from traditional fiat currencies, which are controlled by central authorities like governments or central banks. In a decentralized system, there is no single central authority or organization that controls the network. Instead, the network is made up of a large number of nodes, or individual computers, that work together to validate transactions and maintain the integrity of the system. This is achieved through the use of blockchain technology, which is a distributed ledger that records all transactions in a transparent and secure manner. In a blockchain-based cryptocurrency system, every transaction is verified and recorded by multiple nodes across the network. This means that there is no single point of failure, as the network can continue to operate even if some nodes are compromised or shut down. The decentralized nature of the network also makes it more resistant to censorship and interference, as there is no central authority that can shut down the network or control who can participate in it. Because cryptocurrencies are decentralized, they offer several benefits over traditional fiat currencies. For example, they allow for faster and cheaper transactions, as there is no need for intermediaries like banks or payment processors. Cryptocurrencies also offer greater privacy and security, as users can transact without revealing their personal information. And because cryptocurrencies are not controlled by central authorities, they are less susceptible to inflation and other economic factors that can devalue fiat currencies. However, the decentralized nature of cryptocurrencies also presents some challenges. For example, the lack of a central authority means that there is no one to regulate the system or ensure that it operates fairly. Additionally, the decentralized nature of cryptocurrencies can make them more difficult to use and understand for some people, particularly those who are not familiar with blockchain technology or who lack access to the necessary infrastructure. Despite these challenges, the decentralization of cryptocurrencies remains a key feature that sets them apart from traditional fiat currencies. As the technology continues to evolve and become more widely adopted, it is likely that the decentralized nature of cryptocurrencies will continue to be a major factor in their growth and development. Blockchain technology is a distributed ledger that allows for secure and transparent transactions without the need for a central intermediary. Cryptocurrencies use blockchain technology to record and verify transactions, creating a secure and transparent system for transferring value. When a user makes a transaction with a cryptocurrency, the transaction is broadcast to the network of nodes that make up the blockchain. These nodes verify the transaction using complex algorithms and cryptography, ensuring that the transaction is valid and that the user has the necessary funds to make the transaction. Once the transaction has been verified, it is added to a block on the blockchain. Each block contains a group of transactions that have been verified by the nodes on the network. The block is then added to the blockchain in a permanent and unalterable way, creating a transparent and secure record of all transactions on the network. Because the blockchain is distributed across a network of nodes, there is no central point of failure or vulnerability. This means that the blockchain is highly resistant to hacking and other types of cyber attacks, as any attempt to modify or manipulate the blockchain would require the cooperation of a majority of the nodes on the network. In addition to its security features, blockchain technology also offers several benefits for transparency and accountability. Because the blockchain is a permanent and immutable record of all transactions, it allows for greater transparency and accountability in financial transactions. Users can view all transactions on the blockchain and can see the balance of any cryptocurrency address at any point in time. Overall, the use of blockchain technology in cryptocurrencies allows for a secure and transparent system for transferring value without the need for a centralized intermediary. As the technology continues to evolve and become more widely adopted, it is likely that blockchain-based cryptocurrencies will continue to play an increasingly important role in the world of finance and commerce. Security is of paramount importance when it comes to cryptocurrencies, as these digital assets represent a valuable and highly sought-after target for hackers and other malicious actors. Cryptocurrencies rely on complex algorithms and cryptography to secure transactions and prevent fraud, but ultimately it is up to the users themselves to ensure that their assets are protected. One of the most important security measures in cryptocurrency is the use of private keys. A private key is a secret code that allows a user to access their cryptocurrency holdings and make transactions on the network. It is essential that users keep their private keys secure and confidential, as any compromise of the private key can result in the loss of funds. Private keys can be stored on a hardware wallet or on a secure digital device, and should never be shared with anyone else. Another important security measure in cryptocurrency is the use of two-factor authentication. Two-factor authentication requires a user to provide two forms of identification in order to access their account, such as a password and a code generated by a mobile app. This helps to prevent unauthorized access to the account, even if the user's password is compromised. Other security measures that are commonly used in cryptocurrency include multi-signature transactions, which require multiple parties to sign off on a transaction in order for it to be executed, and cold storage, which involves storing cryptocurrency assets offline in a secure physical location. In addition to these technical security measures, it is also important for users to be vigilant and proactive in protecting their cryptocurrency assets. This includes using strong passwords and regularly updating them, avoiding phishing scams and other forms of social engineering, and being cautious when interacting with unknown parties on the network. Overall, the importance of security cannot be overstated when it comes to cryptocurrency. With the right security measures in place, users can enjoy the many benefits of this innovative and exciting technology, while minimizing the risks of fraud, theft, and other types of cyber attacks. One of the key features of cryptocurrencies is their volatility. Cryptocurrencies, such as Bitcoin and Ethereum, are known for their dramatic price swings, with prices sometimes changing by large percentages in just a matter of hours or days. This volatility can be both a blessing and a curse for investors and traders, and it is important to understand the factors that contribute to these price fluctuations. One of the main drivers of cryptocurrency volatility is market demand. Cryptocurrencies are not backed by a central government or financial institution, and their value is determined solely by market supply and demand. This means that prices can be highly sensitive to changes in investor sentiment and market conditions, and can sometimes be influenced by factors that have little to do with the underlying value of the asset. Another factor that contributes to cryptocurrency volatility is regulatory uncertainty. Because cryptocurrencies are a relatively new and rapidly evolving technology, they are subject to a complex and often changing regulatory landscape. Changes in regulations or government policies can have a significant impact on the value of cryptocurrencies, and can sometimes lead to dramatic price swings. Finally, it is worth noting that cryptocurrency volatility can also be influenced by technological factors. Cryptocurrencies rely on complex algorithms and blockchain technology to function, and any changes to this technology can have a significant impact on the value of the asset. For example, the recent rise of decentralized finance DeFi applications has led to a surge in demand for Ethereum, which is the underlying blockchain technology that many DeFi applications are built on. Despite the risks associated with cryptocurrency volatility, many investors and traders are attracted to the potential for high returns that these assets offer. By understanding the factors that contribute to cryptocurrency price movements, and by carefully managing their investments, investors can potentially profit from this volatile market while minimizing their risks. Over the past few years, we have seen a growing trend of businesses and individuals adopting cryptocurrency as a means of payment and investment. From small online retailers to multinational corporations, more and more entities are starting to recognize the potential benefits of using digital currencies. One of the key benefits of cryptocurrency adoption is the ability to transact without the need for intermediaries such as banks and payment processors. Because cryptocurrencies are decentralized and operate on a peer-to-peer network, transactions can be executed quickly and with low fees, making them an attractive alternative to traditional payment methods. In addition to the benefits of lower transaction fees and faster processing times, cryptocurrency adoption also offers greater security and privacy. Cryptocurrencies use complex algorithms and cryptography to secure transactions and prevent fraud, and because they are not tied to a central authority or institution, they offer a degree of anonymity and privacy that is not possible with traditional payment methods. Another potential benefit of cryptocurrency adoption is the ability to invest in digital assets with the potential for high returns. While cryptocurrencies can be highly volatile and risky, they have also delivered impressive returns for many investors over the past few years, and offer the potential for long-term growth and diversification. As more businesses and individuals begin to adopt cryptocurrency, we are likely to see continued innovation and development in this exciting and rapidly evolving space. From new payment solutions to innovative investment products, cryptocurrency adoption is opening up new opportunities and possibilities for individuals and businesses alike, and is helping to shape the future of finance and commerce.